Welcome. Good morning. Welcome back to another live 0xResearch
I thought we were
podcast.
just not going to do
Thought we're not going to do what?
The pod. We just waited out there for like 5 minutes. It's the longest I've ever had to wait.
No, I always like to wait for the music to fade, you know. I like to get my full value out of the Feeding the Ducks soundtrack.
I don't know if you should share that because I feel like that's proprietary, right?
No, it's free. It's free. We're joined by Ryan Cashflows Connor and Carlos from the research team today. We got a full research lineup. Had a friend of the show cancel last minute, and we've got these guys to fill in and have a lovely conversation today. How are you guys doing?
All good. How about you?
Ryan's telling me Sultan of Solana, Carlos. Should be your name.
I thought he was referring to himself.
It might have to be like Metadao Maestro or something like that.
Blockworks
I'm
Research.
good this morning. The NASDAQ is up $1.44. Markets are risk on. Trump and China nearing a deal.
You know, I was doing the newsletter, and I noticed that the two outperforming indices are DeFi and revenue. So Hyperliquid, Pump, and Jupe, like tokens that make money and then use it to buy back. And then the second highest performing indices is like our no revenue index. So it's like XRP and ADA and stuff that have just gone up a lot. So it's like a really weird. I was writing about it. It felt quite weird to write about that because it's like the market doesn't know what the fuck it wants. It's just like, I want to go up. And it's like the buybacks go up and then XRP fucking goes up 40%. That's it.
Yeah, risk on comes in many forms. I feel like maybe to Ryan's market comment, like last week we saw like quantum stocks take an absolute nosedive. Meanwhile, you know, like you said, generally markets are still just ripping up. And that includes like fan favorites like, you know, your Palantirs and all the AI trades, etc. So there's always rotations. Even, I mean, in crypto, I think we're definitely used to the rotations too. So it's not crazy to see XRP get a big run here and there.
XRP is cool because it's like both a meme coin and like a real business that's acquiring a bunch of stuff. You know, you might put the XRP in the revenue index one day.
What are they buying? What are they acquiring?
They bought a prime brokerage. They bought a stablecoin issuer.
Oh yeah.
Yeah, they're not. They're not fucking around. They're not messing.
They have a lot of money.
Yeah.
Danny, what's on the agenda today? I assume we're gonna start off with equity perps, or do we want to do Solana hatred first? Which one do we want? I want to take a public. I want to take our Sol hatred a little public.
What's the Solana hate? We're just covering thoughts on Sol. Is that?
Yeah.
I wasn't prepped on Solana hatred, so lead it in for me.
We got a response on Friday, and it was that like apparently I hate Solana was like a YouTube comment that we received, was that Boccaccio constantly hates on Sol. Which made me think, I guess I have been hating on Sol for some time now, which made me kind of reassess. I don't hold any Sol anymore. Well, I hold very little Sol, just like in case. So I can show it on my So I can show it on my disclosures if someone's like, oh, Like, if
Within
SOL
the
goes
same
up,
sentence, I don't hold any
He's
SOL.
hedging.
I have a little just in case.
I have a little just in case, but
Has
it's not
no clue.
meaningful enough that I can be like. I've put all my SOL exposure into pump, realizing that I don't really care about SOL. I care more about the meme coin stuff, and pump makes. I think pump will continue to be the winner, or at least a dominant player within meme coins, and within that, I think it's more reflexive, probably because it has a massive buyback. Do you guys see they are incorporating Padre revenues into buybacks as well? Curious if you guys share
How much
this
was the thing
vision of.
making?
I think what they last I checked, the tweet was about like how it's been 2 days and they've done $200,000 in buybacks. That I think that assumes it's like $100,000, but you also have to realize that this was post announcement, and I imagine in the first 2 days, a lot of people used the Padre app to buy Padre. So I would say it's probably like maybe 50, 60K, but like this is also, I assume Pump bought it so that they can flesh it out and then make it a good product.
Yeah, I mean, look at how much Axiom makes, right? Like, I assume they want to do something similar with Padre, maybe not the same amount of traction, but like if they can get like some users from Axiom, they could like realistically generate 100K plus per day, which is not insignificant. I mean, they've been making like $1 million in revenue like for the past few weeks. Like that would be like a 10% increase in revenue in the near term.
Yeah, I would say the reason for verticalizing is pretty obvious. If you look at the year-on-year percentage change in total like meme coin supply chain revenues as of the end of September, it was up 4x. I think pump revenues year over year, September through September, were up like 1 or 2x. So a bunch of folks entered the meme coin supply chain and got fees. And the big obvious ones are the Telegram trading bots. So there's just like a lot of value leaking. The Telegram trading bots think that the value is leaking to Pump. Pump thinks that the value is leaking to the Telegram trading bots. Makes sense to verticalize. There's just a lot that's being left on the table if you're not vertical.
Yeah, I think this acquisition was a pretty obvious move from Pump. You're not going to go out and buy Axiom, and arguably you wouldn't go and buy one of the prior incumbent teams that used to be dominant, like a Photon or Bullx, because I think they would just ask for and probably command still too much of a premium, even though their heyday is gone. And you can observe that in like Padre is a like relatively newer. It's kind of like their newer product is more in line with this Axiom camp of trying to roll out this like full terminal style trading app for memes. And their volumes have been growing since the beginning of the year. Meanwhile, if you look at Bullx, Photon, some of the other prior, like, last year, 2024 peak meme cycle trading bots, they've just been declining since then. This is something we see over and over again. Like these teams kind of continuously recycle as like a new kind of top of the line trading app, comes into the fray, and then everyone copies them, and there's like creative destruction. So I think it makes sense that they picked up a small player, pretty unrecognized. The token, I guess there's some controversy on the token a little bit as well. Personally, I had an idea maybe to be long Padre a couple months ago and decided against it for a few reasons. That looks like that was the correct choice because you didn't really get rewarded via this acquisition. They are apparently going to snapshot and pay out Padre holders with pump tokens, sort of like whatever the value of those were prior to the announcement of the acquisition. But there wasn't really a good trade in there if you wanted to be long Padre. It's just going into the pump value stack. But pump gets this acquisition like for cheap, right? You're not having to pay a premium to token holders. So it's kind of a win for them.
What would have been the Padre thesis? Like what were you going for there?
Axiom beta, lack of an Axiom token, building out a similar product, potential acquisition by a pump or similar player. I think all those things turned out to be true, but the risks and I think the downsides were they weren't actually executing on the value accrual mechanism at the time. Like there was not buybacks or like referral fees actually kicking into addresses at the time. And the speed of shipping progress by the team left me a little questionable as to whether they would ever be in contention with something like Axiom for real. So ultimately decided against taking that trade, but those are some of the core kind of catalyst ideas.
Yeah, I mean, a bunch of people bought like just on the back of Danny's thesis he just fleshed out. And imagine just being right on everything and the token goes to zero. Like, this is like a bunch of people were saying that this is an advertisement for MetaDAO, like ownership coins, right? I think like it does point out to the fact that some coins do deserve a discount or trade at a discount, just because like you do have that uncertainty of what if they just rob my token holder rights, right?
This also makes like Pump the only relevant trading platform token now, right? Like there's none other. I mean, I guess we used to have Unibot, but Pump's the only one that actually has now a liquid token for a trading bot application. I don't know how much money they'll spend. Ryan, maybe you can illuminate me a little bit on this. I don't really understand how. Like, if as a company you acquire a smaller product and you want to flesh it out, how much resource do you put into it? I mean, we know that trading applications can do really, really well, but is it just like, should they just be giving out kickbacks in Pump tokens or something like that? Because, like, in my mind, there's a million things you can do. You can Pump clearly knows how to incentivize people so they can do some like fee stream a la creator fees, etc. Or they can do kickbacks the way that Axiom has historically done. But I just don't know how much time you want to spend on that. What do you think?
I mean, how important do you think the kickbacks are to Axiom?
See, that's the thing. I don't think it's that important. I think most of the Axiom volume came from farming a potential token. I always think.
You think it's very important? I mean, well, you think that's some incentive for using it. I feel like Axiom is just a joy to use. I think it just has the most advanced features. Like when I click the button, the order goes through and you make it and then you get the token. It's something that I think is challenged by a lot of these bots. It has like very cool advanced analytics. I'm sure it matter. I don't know. It's if I were to guess, it's one of the few crypto projects that I don't think is solely driven by some promise of a token or some points program. Like look at the market share that it took in that time. It just took the whole thing over a few month period. But I don't know. You tell me.
I don't know, because I felt the same way about all of the other Telegram bots. And then like there'll be a better Axiom, right? This is not really saying anything. Yeah, I guess it is much easier to use. So
maybe there'll be a better Axiom. I'm torn on Pump, and I'll give you guys my lay down here. But I agree with Ryan on this point around Axiom. Like they're just shipping the best product for like these trench traders, and historical meme trading bots like have never shipped like this. They were kind of more classically, hey, we're doing points. Hey, the token's coming at some point. And then they release no updates, no details on token. The product doesn't change for 6 months. They're just printing, 100
they make
million.
A bunch of money and it's theirs. Yeah.
They're printing 100 million a month. They don't have to drop a token. They just cash out. And when it, inevitably when that leads to them getting displaced, it's like, it doesn't matter. They made 9 figures operating this product. Axiom is the only one to date where we've seen them this team consistently drops 7, 8, 9 feature updates per week into this product, which maybe they're small things here and there, but I just think in this category, I haven't really seen that level of just like consistent speed of development. And so here's where I'm torn on Pump is I see this acquisition of Padre as a good thing for their platform. I'm disappointed, one, that it took so long to do. I think they should have bought a trading app, acquihired, whatever, 6 months ago, 10 months ago. I mean, we've been talking about, as soon as they did the raise, we were talking about a trading bot, trading app was like a clear acquisition target for Pump. I'm surprised it took this long. I'm just disappointed by how slow they're being on this. I think they should be devoting more resources. To your question, Bach, I think they're kind of under focused on this. Because like Ryan said, there's a ton of value on the table for them to have a meaningful and substantial product here that like Axiom and others are just getting to kind of print on in the meantime. So the concern I would have is that if they're not going to ship fast enough, I think Axiom is just going to continue to dominate in this corner of the market. Because I guess the other thing I'll say is, having used and looked at both Padre and Axiom, like they're not, it's not at the same level of Axiom. So they do need to put resources into this thing to get them up to speed to where Axiom is at today. Not to mention, I think Axiom it's got Hyperliquid perps integrated. They just added BNB because BNB memes have been going crazy. So they need to catch up in a few respects.
Well, I mean, to be fair, they did have other priorities. Like when they were conducting their ICO sale, Pump.fun was taking a lot of market share. I guess it was more of a priority to regain market share than to have a trading bot, like if no one was trading Pump.fun coins at the time. And then they also like had a big effort on the live streaming front. So I guess it's just a matter of prioritizing. I don't think they're going slow. Like I would take the under on that.
Seems the clear, like I hate to think about the end state, but it seems like the trend is toward owning a lot of the features on the front end. Seems like there's no other way to do it. Like actually the ideal scenario for Pump is that the revenue moves up to stack so that the launch pad like is not as relevant. So like it doesn't matter where the flow goes from, the token creators go from Solana or to BNB or to Tron, like you just kind of have it all.
Yeah, I think I'd agree with that take. Like I guess you'd have to question, like, let's say this BSC meme dominance, because they've continued to take meaningful flow away from Solana memes. I wish I had a chart up, but you can see like a decline in Pump token launches to 4 meme launches in the past month or two. And I mean, it's similar as to when we saw Bonk Fun. You're seeing like a replacement of creations from one platform to the other, basically. People are chasing. If that continues, like at what point does Pump actually have to consider going multi-chain, potentially? I think people talked about like Pump Chain. There's probably more value in them just being on other venues.
Yeah, I totally agree there.
Yeah, I mean, they've been diversifying their revenues. Like previously, 90+% of the revenues came just from the bonding curve. After they introduced dynamic fees, that shifted towards like 80% bonding curve, 20% Pump Swap AMM. I think with Padre, they are now diversifying further, like creating new revenue streams. So like, I assume like, I don't know, like 10% will come from like their trading bot, and then the other distributed like between the AMM and the bonding curve. And so I agree with Brian. They just like verticalizing like and creating more revenue streams and capturing a greater part of the stack.
I mean, it really is this is one thing I think they do better on the Solana side as opposed to anywhere else, is like buying up competitors, bringing it all under like one product. I saw Jupiter's also, like, this isn't buying up, but like Jupiter's launching prediction markets on their front end, right? And that's, I mean, it feels like that's all that Jupiter's been focused on, is bringing every single tradable market within their front end, and they own some of the back end. Like Meteor is them technically. I don't know how the token equity split is going to work. They have their perps product, not a great perps product, but they own it. It's in their front end. They run the back end. And they made so much money off this prop AMM stuff, right? Because you can't interact directly with prop AMM unless you're really good at smart contracts or really good at Solana. Carlos, correct me if I'm wrong, but like typically it's just like it's a contract that needs to be hosted, and it works best on aggregators. So they've made a lot of money, a lot of good decisions. And this is something that I feel like on the Ethereum side, they've done particularly well this cycle. Not a lot of like, I'm going to make Ryan very happy. Ryan, do you know that thing where it's like tech is just bundling products? Have you heard of this before?
Bundling's important, yeah.
Yeah. So on Solana, we're doing a lot of bundling now. And then we'll see, maybe we'll do some unbundling next. But like, I feel like on Solana, they're doing a lot of this bundling at this point. Hoping to see more and more of that on the EVM side as well going forward. I feel like on Base, we'll have some of that. Aerodrome's starting to do it a bit. They don't have an aggregator, but they have a launchpad now, as well as a trading product, obviously.
Yeah, that was one of our 2025 theses was multi-product DeFi, and just it makes sense to bundle financial services. They really shouldn't. It's painful for the user when it's not all in one place with financial services. It's probably the place where the bundle works best because money's so fungible, it can move so quickly. So you kind of have to survive. And yeah, no, it started on Solana. You can kind of see it creeping into ETH land, but not at, they obviously have different things that they're optimizing for. So I don't think you've seen it spread as fast.
Yeah.
But I would imagine that 26 for ETH looks very different than it did for 25 with respect to the bundle.
Well, and it's not just multi-product DeFi, it's also multi-product chains now. That's like becoming a core idea where fees from the chain, everyone's gotten this idea into their head that like they're just not going to be worth what they're worth today long term on fees if we're going to continue to drive those down, even if user transactions or demand drives up. So whether it's stablecoin, in-housing the stablecoin, in-housing the trading itself, Hyperliquid, in-housing lending or other DeFi products, that seems to be like the direction more broadly. Like and maybe at some point here, you kind of blur the line between like a chain and an app, or just a chain and a product.
Oh, totally. And like maybe the framing of DeFi is perhaps too narrow, but perhaps the actual definition of DeFi is too narrow. Sorry, yeah, it's too narrow in and of itself. Like all these things are actually like financial services. So you should, like, it makes sense to trade your meme coins where you trade your Hyperliquid perps, right? And maybe buy your NFT, but I don't know. That's Bach.
I don't know. I don't think you need to. The one thing here is that I don't think you need. Okay, with the bundling, unbundling, putting everything under the same front end, I think it makes sense to do it as like what you mentioned, where it's like everything is fungible. I think one part of crypto that is also great is that everything is very composable, so you can like get really silly with stuff, and like instantly get really silly with stuff. I don't know what the process would look like for me to, for example, if I have I'm trying to borrow on a position and then put that somewhere else where I can earn yield. I don't even know if that would be possible. And if it is possible, I imagine it's like a multi-week thing, right? For me to be able to do that. Versus in crypto, it's like a 10-minute thing, and 9 of those minutes is you clicking through approvals. So like that's one thing. On the other hand, with bringing everything in-house, I've been thinking about it. I think like the next crypto thing is probably just apps like that don't actually do a lot of things. I think Hyperliquid was kind of early to this with the builder codes thing. And with like HIP. Well, it's true. Don't smile. Like it's true. I think that's like whatever. I think whatever.
I think the next big thing in crypto is apps that don't do a lot of things.
Yeah, but it's like, but do you understand what I'm trying to say? It's like, it's just like a very pretty front end. We've had one app that's been relatively good at this, which is in Silico Terminal. But it's just, it allows you to trade across like 8 sexes, and that's its whole use. But I would like to see something a bit more compatible across DeFi and able to do a bunch of things all in one. I think that's like the next big app. I mean, we have DeFi.app as well. It's not very popular, but that's the thing you can use.
Yeah.
I mean, you're just describing a wallet, no? Like, I imagine Phantom or something.
This is what I wanted. This is what I want to talk about.
The problem's the embedded browser. Like with wallets,
Um,
it's such a painful experience to use any wallet because it's just like embedded browser, right? Like even like WeChat doesn't do the embedded browser; they have just like app icons, and it feels a lot better.
Danny, can you pull up the Rabby tweet? This is what I wanted to. Do you know what I'm talking about? I can pull it up. I don't. I'm asking you. So, there we go. So Rabby's integrating Aave, right? Or at least it seems like they want to integrate Aave, and they've already integrated Hyperliquid. And my long-term thesis was that essentially wallet is the best way to do this because everybody already has it downloaded, and it's just like it seems like a logical step. I don't think that I'm not very convinced that the current wallets will be able to pull this off. Even Phantom, which is a good product objectively, has not been able to pull off a good HIP builder code, Hyperliquid builder code integration. It's laggy. It doesn't give you the fills that you want, and it just feels awkward. So I agree with you, I guess, Ryan, is that like the in-app browser doesn't make it feel great, especially on the mobile app. And it's also just not optimized to be that way. Like everybody in crypto still uses desktop for most of the time. I think I only know one person who only uses mobile, and it's Effort Capital, which says a lot for multiple aspects. So I think we just haven't gotten there yet where like we need mobile apps. I think whoever manages to solve it and slaps a token on it makes a lot of money. So if you are doing that, please let me do your seed round.
I think this is a solvable problem though. Like using Phantom as the example, I mean they have a lot of the pieces of the in-app like mobile browser pretty well figured out. Like whitelisted links for popular apps. I think then they just needed to go like 2-3 more steps to where you have like portfolio trackers that do and understand that like your address has positions in DeFi and XYZ other thing. Like they need one more tab in the wallet that's like your DeFi stuff, and then it's like, oh, you've got loans in Aave, and then it's just like tap that and you're in, you're looking at the markets for Aave like immediately rather than you having to go through the browser like you're suggesting, Ryan. I think there's fixes for it. They just, they need to do a little more UX UI wizardry to like totally get there. But I think that's solvable. I find myself personally like going more and more to mobile than desktop just because things have gotten easy enough, like good enough to where I don't need to be stuck at the computer all the time, which I think is a good thing. Now you still have to like, I'm not going to like natively swap in Phantom and pay them 0.85% on every trade I take. I'll go pull up an app and do it. But still the experience like actually enables me to do this versus I think before mobile wallets were like way off like a couple years ago.
I think no, sorry. I was just going to say like, I think beyond wallets, the other player that's positioned really well to do this are centralized exchanges, because they already have like users trading on them. So imagine like with modular architectures like, I don't know, like Morpho, Euler, Camino, they can just embed bolts into their centralized exchange where you can like deposit and earn yield on your USDC directly from the centralized exchange. I think they had a thing with Plasma and
Binance, that BNB.
Yeah, exactly. So I think like beyond wallet, centralized exchanges can do really well, especially because you don't have to worry, like for new users, you don't have to worry also about like self-custody.
Base is actually doing a pretty good job at this. I didn't want to have to say it, but it feels like no one else is going to say it. Base is doing a great job at this. I mean, they integrated Aerodrome, they integrated Morpho. Who else? Clanker, Zora, the Everything app, the Base app. They're doing a pretty good job. What I wanted to say was, well, actually, Danny, let's just ignore me. Do your thing.
Good. Okay. We can jump on to the next topic. Before we do, let me do a quick shout out to today's sponsor, Katana. This episode is sponsored by Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL. believing that chains should be graded on how efficiently assets are put to work in DeFi rather than just total value locked. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added VaultBridge yield, and other chain revenue. Follow the link in today's show notes to get started. All right. Yeah, I guess we can call it on the multi-product DeFi conversation. Do we want to talk MEGAETH? I guess that's kind of big news today. Their sale went live this morning, instantly oversubscribed. I could pull up the tweet. It was oversubscribed like within 5 minutes, supposedly. I looked at the contract maybe an hour ago, and there was already 160 million or so allocated. So quite a bit of demand to get into this thing.
300 million right now.
It's 300 mil now? Okay.
Yeah.
Jesus Christ.
So it's what, 6x oversubscribed? It's like a 50 mil max allocation at a $1 billion. Well, 999 million. They don't want to be a unicorn. $999 million value FDV.
I want to ask Ryan, Connor, are you guys do this?
How much time do I have?
You have 48 hours.
You have 2 more days.
Oh, yeah, why not? Yeah.
This, I'll give my takeaway here. I'll just give a quick takeaway. I feel like this feels pretty similar to the past few sales. Like, reminds me of Plasma, reminds me of Pump. Feels like they're giving away an opportunity where if you have access and you have the funds and you can allocate to this thing, pretty seemingly a almost certain positive immediate term upside on this sale. Longer term, who knows? Will it trade up or down? In the midterm, probably. But it seems pretty much set up like the other past big sales we've seen, where ICO to public is probably almost guaranteed short-term upside.
Yeah. I mean, if it's... Go ahead.
Who's going to go first? Ryan, you go.
I think it's obviously like the valuation's a little higher than I would personally like. That's like, I think, pretty obvious. However, if when you look at all the new chains that are coming or that have come to market, I think they've lacked differentiation. MEGAETH is, one of the few exceptions. They're getting more interesting than the new ones that you're starting to hear about, like Fogo. It's like the very obvious thing is like, okay, see what you can do with chain architectures that haven't been done before. That may be attractive to a new type of trader or a new type of way to provision liquidity. I think proximity markets are pretty interesting. I think juicing the EVM to the max is pretty interesting. And the community building thing, I think, I don't put too much stake in it, but given how early stage it is, they've done a really good job in getting people enthusiastic and like best branding in crypto, hands down, without question. Well, I need some MEGAETH merch if anyone's listening on the team.
We can ask them. They were on the pod on Friday. Why didn't you tell me you wanted it? I agree with you. What I wanted to say was that there's this in 21, it was very much about trying to get into Discords and trying to get in with the right people and figure out a way to get allocation into these things that seemed like it would be maybe free money. And now they're kind of allowing you to buy in at but back then it was very degen, even though I don't like that word. Not very serious stuff, but now they're allowing you to buy in at this middle stage where it's you're not getting into the private rounds or the super low valuation seed. But you also don't have to pay. You also don't have to deal with a lockup or a 3-year lockup or vesting. But you're also not getting super expensive. You have to buy in the public market, which is what I think we did a lot in 2022, 2023. Stark launched at 30 bill, I think. Please, if anybody wants to correct me.
It's 20 bill. Traded up to 30 or so. Yeah.
That's ridiculous. And that was the only, if you are not a venture capitalist, the only way for you to get Stark exposure during that first month was you have to buy it at $20 to $30 billion valuation. Versus now, this is, like Danny very thoughtfully noted, It's like the 4th time you can buy something at a relatively decent multiple. I wouldn't say it's like you can't put a multiple on MEGAETH right now, but even Pump, I don't know what the multiple was. I'm sure Ryan Connor knows somehow, but like it wasn't super cheap. 4 bill isn't like, holy shit, I need to put my whole
Like 20x.
Yeah, but it was a good deal, and you could tell it was a good deal because you're like, this is it. Everyone was like, yeah, this, you probably want to do this, and we're getting a lot of this like, you probably want to do this, and not a lot of like, holy fuck, this is free money the way that we had in 21. Markets changed.
I'm just gonna say the point to like not a lot of like this is free money. I think with this sale design, which has become like more and more common, is that it's impossible without artificially just selecting a lower valuation and then being more restrictive in how much capital's out. Like it's just like the IPO game, but re-wrapped up for crypto markets. The lower you set the valuation and like how much capital you let in, you could make it more and more free money, but it's like locked up to fewer participants, and they get, you get the silly pop on day one, and then it bleeds out.
Yeah, I guess this kind of sucks for, I mean, it's great that they let you invest, like they let anyone invest, but it kind of sucks for smaller players, because if it's like 30x oversubscribed, like you're like, realistically speaking, it's going to be insignificant, even if the token does well. So like well-capitalized players just have the upper hand here. I would love it if like for a race like this, like just to punish some people, they actually take the entire race. Like if they commit 300 mil, expecting them to just take 5 mil, like they take the 300 million.
They did that in Plasma.
Yeah.
But I think this time around they have a max cap, which is cap, which is 186K. The speed of light.
It doesn't apply here, but like for instance, for some of the MetaDAO races, like people know they're not going to take the full amount, so they just commit like, I don't know, $20 million, expecting to just have like a $1 million allocation. Imagine if the team just says, oh, you know what, we'll take the money, thank you. Like that would be super funny. I think that will like just kind of discourage this kind of behavior.
Yeah, there's like a size war problem.
Well, I don't know if it's the smartest thing to do if you have a lot of money. It's to max fill, and because you're going to get diluted anyway.
Yeah, but it's a failure for the platforms, right? If that dissuades investors from allocating because they know they're going to get $1 or 1 penny on their dollar, maybe you need to redesign the mechanism somehow. I don't know. Carlos, I saw that there's been some suggestions around like, maybe a small fee relative to how much you allocate into a sale, for example, so that, it's not lucrative to just like shove 100 million into a ICO that's looking for 300K.
I like the Legion model of how you can use on-chain history to vet participants.
Yeah.
Like I don't think that the open ICO model is useful. Like you don't want a bunch of anons who want to sell your coin immediately. Like you don't just want randoms on your cap table. You want some curation mechanism. And I think the way Legion does it is pretty cool. Like there are people with really high DeFi scores that have like 70 followers on X, but they're like moving money in like on-chain on ETH. And, perhaps you want to filter for that type of sophistication. I don't think just like blindly letting folks contribute as much money as possible is like the way to go.
Yeah, to be fair, they're doing this, they're doing this here. You can connect like your wallets, and they can look at your on-chain history. You can also connect like Discord, Twitter, GitHub. Yeah.
What platform is it on?
It's on Sonar by Echo, by Coinbase now.
By Coinbase.
The issue here is I rotate my wallets, so I never have great on-chain history. And you're supposed to, like, you should be rotating your wallets. It's good. So I guess like,
and also, do you really want to expose like all of your wallets? I don't know.
Well, you just expose it to the team, right?
Yeah, I also have a fluffle in one wallet, so no, you just expose it to the team. I have a fluffle, so I put that one down. I really like Twitter when they're like, oh, this guy has a nice Twitter, because somehow I've been on like these Yapper leaderboards for quite some time, even though I stopped tweeting. So I really like it when they do that because it means I get extra allocation. Makes me very happy. I'm hoping they do it for this one as well.
Maybe another slightly related Stable recently did a raise, so like stable coin chain, kind of similar idea in concept to like a Plasma, but there's some details going.
Did we lose him? No, I gotta kick him off. Hey guys, just slightly related to this. As you know, there was the recent Danny. I had
Dude, he
to
took
cover
me off
for
the
you, buddy.
screen. That's crazy. Yeah, I'm back. Basically, big, massive wallets linked together, shoving a bunch of funds into this stable vault before it was actually publicly announced. So, kind of like a layer on top of the idea of, you know, just shoving a bunch of capital in to ensure an allocation, but shoving a bunch of capital in before anyone else even knows about it is kind of going a layer deeper there. Not ideal, but I guess, you know, maybe to Ryan's point, if the team knows that they want, you know, a few individuals on the cap table, but they're doing a public sale, this is kind of the way to go about it to achieve both ends. I don't even know why. What's the purpose of doing a public sale in this manner, though? If you're going to privately kind of have individuals, you know, shoving all the allocation before anyone else knows about it, it's kind of defeating the purpose. No.
Yeah, this is a tough one for me because I did Plasma, and then I like the Plasma team, so take everything I say with a grain of salt because I am biased. But this to me is like, I mean, this is clearly the team just trying to make more and more money, which is fine. It's just like, don't position it as a way. The thing that was like really funny about this was that you can do this, and a lot of teams do this where they give themselves free money, but typically it's done through an airdrop because you can't really track airdrop wallets that well. Like, and you always have like some form of you can disregard what people say, right? Oh, like this wallet got $10 million in airdrops. I don't know. It's probably some whale in like whatever, China. You can say that. But like here, it's very clear. These are all connected and you're depositing them all into one. And you don't have to do this. Like Stable, you're designing your own tokenomics such that you can decide, hey, like, let's not deposit it into the vault, but we'll do like an oversized airdrop campaign to like our own wallets. That's a very easy way to get out of this entire situation. But instead, these guys decided, hey, we're just going to deposit $500 million 15 minutes before. The total raise is 750. So you're taking 66%, 67%, 15 minutes before. Makes no sense. It's a stupid way to approach this entire thing. Like, if you're going to cheat properly. Don't like half-ass cheat. What's funny is half an hour later, they tweeted about it. They quote tweeted this, and not this tweet, but like their own tweet where it filled up, and they were like, "This was the most successful stablecoin chain deposit program that's been run." I was like, "Yeah, of course, buddy." Like, you know, it closed in 1 minute because you finished it 15 minutes before. There was nothing left. I don't know. This thing was super funny to me, and I think this is one of the teams that I don't know what the price action will be. I have no idea. I haven't looked at their tokenomics. I haven't looked at their plans. I almost feel a bit bad for some of the teams that have aligned with them. Like Aave aligned with Plasma, and then Morpho's aligning with Stable. But I don't think Morpho's making that decision on purpose. They're just like, we need a stablecoin chain. Like, it's going to bring them a lot of deposits. So they have to align with Stable. But I don't know if the Morpho team wants to even be associated with Stable at this point. It's like a weird brand to be associated with. It's a very long rant calling people stupid. So if you guys disagree, please tell me.
No, I agree. I just thought it was silly entirely. Like, what's the purpose in allocating to your own sale? You could just, you know, you're designing the tokenomics. You can give yourself more tokens if you want to. You don't have to move 500 mil on chain to like do this, you know, in a fake manner. You could downsize the sale and then raise as much. It just doesn't make sense on a lot of levels, I think. So, and maybe they're trying to give it the air of like demand and legitimacy, but like when you do it that obviously, it's a bit. They shot themselves.
500's a lot. 500's a
Yeah.
lot. I would imagine that there's some syndication. It's not the actual team, but perhaps a lot of wealthy people that they know, all in a bucket.
Yeah, the CCP.
And then even in that vein, it's like, if you've selected wealthy individuals to invest, again, my question would be why even do the sale? Just sell it all out to them and then go, TGE later. There's no need. It doesn't make any sense.
What project is this?
This is Stable.
Stable. That's the Plasma competitor, right?
Another stablecoin chain.
Everyone the sentiment here seems to be very, very negative even before this.
Yeah.
Everyone was.
What do we think of Tempo? Yeah, Plasma. I think they're gonna fix it. I'm hoping. I'm messaging River daily and I'm asking him for updates. So I'm on the case at this point. I'll make sure it gets sorted out, guys. What do you guys think of Tempo? Like the Matt Huang paradigm thing that went live with like 800 traditional financial corporations. Like McKinsey's going to be on chain. Is this like Hedera 2.0, or are we getting like an actually really good chain that you're never going to be able to buy in public markets while they like bloat the private market valuation from 0 to 500 billion in front of your eyes and make you watch?
I think there are a lot of people who say that credible neutrality really matters, and it matters more than anything else. And I think within the next 12 months, we're going to find out how much it actually matters. Like, no one's happy that they're beholden to Visa and MasterCard. So why would they want to be beholden to Stripe and some consortium of private entities? I think that's an interesting case to make. I also think at the same time that, for performance purposes and just like to go where the TAM is, for performance purposes, you want something centralized, which I think crypto repeatedly, like the centralized players repeatedly win in crypto. So I think, for the first time, we're actually going to see whether or not that matters to institutions. I don't know how to bet on it. I think you want to place bets on both the centralized guys and the decentralized guys. But I think over the next 12 months, we're going to find out if it actually matters.
Now, when you mean centralized guys, do you mean the decentralized guys? Do you mean actual decentralization, the way that Ethereum is, or do you mean like Solana?
Well, yeah. So I think the Solana messaging, I don't know if the messaging has pivoted, but they certainly are pounding the table on like, we are the credibly neutral blockchain for institutions. Now that they're starting to see some market share being lost to Hyperliquid and potentially other competitors. Well, I don't know. Does that matter? I think it's an empirical thing. I don't think you could take a first principle stand on it. So I could see the argument for credible neutrality. Like you want to move money. Like one of the cool things about crypto is you can move money around and no one can stop you. At the same time, you also want to go where the TAM is and go where their performance is, where you can move money easily. So perhaps that's a Tempo. Perhaps it's a Hyperliquid. I don't know.
Yeah, let me share with you guys one of my more poignant tweets. Oh, I need to. The quality is really not great. Can you see it?
Yeah.
Oh, I gotta zoom in. There we go.
Is this a meme template, or is this?
I created it. Do you like it? I made it on my own. I remembered the chart. I remembered the image from somewhere. This is very good. But yeah, I mean, I agree with you. That's
bring it back.
Hyperliquid launched. All right, I'll do it.
What were you saying, Doc?
I mean, I find it funny that Solana's going through this as well, right? It's like for 3 years they fought against being called centralized scams. And then as soon as something that has less validators launched, they're like, wow, we are actually decentralized. And I mean, it makes sense from like a marketing and narrative point of view, right? Like if you want to argue that, I would still say Solana is probably the most performant L1 in terms of like decentralization as well. Like it's not realistic we'll see what Monad does. We'll see what ETH does in a few years with all the sharding in place and going live. But right now, in terms of live L1s, and I don't think that's necessarily a good thing from my point of view, or a bad thing. I can see why you would want to position one way or the other. Like, I mean, if you want pure performance and trading, Hyperliquid. If you want credible neutrality, Solana. We'll see which one works out better in the long run, but it's a fine way to position yourself.
I agree with you. Like, it feels like people were discussing this exact same thing, like, but with Solana and Ethereum. Like, the meme is actually, there's a lot of truth to it, right? Like, Ethereum were calling Solana centralized, and Solana was saying like all that matters is performance. I feel the same thing applies here, like with Hyperliquid, right? Like, all that matters is who has the best product at the end of the day. If people are willing to use it, it really doesn't matter if you're more decentralized or not.
I agree.
I do wonder, and I don't know, maybe this is a hot take, but I feel like at least within this industry today, it's like kind of this psyopt maxi idea that, like, I don't know, people play into the meme, you know, Bitcoin, digital gold, and all that gets people convinced to just buy and hold it forever. If for ETH, it's like the most credibly neutral, decentralized blockchain in the world, and that they should just like hold the ETH token for, you know, into eternity, and it'll go up into an infinite valuation. I feel like some of that's kind of at play. It's just like, how much do you psyop the market into believing that that's true versus like, what are the revenues? What's the product? How much are they iterating? But I think we'll see this play out over and over again just because of the like cultiness, maxiness.
I mean, decentralization doesn't even like happen only at the infrastructure layer, right? Like, there's other layers of centralization that you cannot just bypass. Like, think about stable coins, for instance. Like, even if you're using like Ethereum as a credibly neutral settlement layer, like USDC and USDT are centralized, right? Like, there's no other way around it. So like, there's always a spectrum, and you cannot just like go full decentralization. Like, you will always have to have some layers of trust in the supply chain, I guess.
Yep. I agree. People are willing to make trade-offs on different things. Before we close things out here, I want to do a quick shout out one more time to our sponsor for today's show, Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL. In just 2 months, Katana has surpassed 500 million in TVL, with over 90% of that TVL being productive in ecosystem apps like Sushi and Morpho. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added VaultBridge yield, and other chain revenue. Follow the link in today's show notes to get started. Thanks so much for tuning in today, guys. We appreciate y'all, and we will see you this Friday. Carlos, Ryan, Boccaccio, thanks for coming on.
I don't think we'll see Carlos and Ryan this Friday.
No, I was saying thank you for joining today. They may or may not be on the show alongside us.
My pleasure. Great to be here.
Wait, let me put this on before we leave.
Always glad to have you, Cash Flows Connor. They saw it too. Big Stuck in the audience saw it.
Okay, very good.
Super fan.
Top 2 panels, bottom 2 panels.
Get Big Stuck a commemorative NFT.
Yeah, we will.
Yeah, when are you doing the NFT collection, Bach?
Let's not talk about this live stream, right? Like, people are gonna expect stuff.
Come on, everything has a content coin now. All right,
yeah,
we'll call it there.
Right.
Thanks so much, guys.
Peace.
We'll see you next time. Peace.